Welcome back to Pro Ticker Podcast. We're doing a deep dive today into something that's been all over the news lately. And yeah, it's been moving markets. China's economic slowdown.
Mm-hmm.
We're going to be dissecting a piece from the Wall Street Journal, really trying to understand what's really going on and what it means for you, even if, maybe you don't follow the global economy super closely.
Yeah, it's important to remember that China's economy is so deeply intertwined with the rest of the world that, it's kind of like when it sneezes, we all catch a cold, so to speak.
Okay, so no pressure there, China, right?
Right.
But seriously, the Wall Street Journal, they're reporting that China's growth, it's slowing down, reaching only 4.6% in the third quarter.
Right.
That's got to be concerning, right?
It is, and here's why. That 4.6% figure, it falls short of the 5% growth target that the Chinese government set for the year. Now,
Yeah.
look, any growth is, technically a good thing, but this slowdown, this is everyone from economists to, everyday investors a little bit on edge.
Yeah.
And it really raises questions about whether China can actually hit those economic goals and what that could mean for the global outlook, going forward.
So it's less about like no growth and more about growth not being what everyone expected. Like the slowing is what's making the news.
Exactly.
Makes sense. And I imagine this is where we get into the whole stimulus conversation, right?
Yeah.
Because the journal mentions that Beijing has been trying to like pump the brakes on this slowdown.
Exactly. China's been using a few different levers to try and stimulate the economy. One of the big ones is cutting interest rates. They just did this again last Friday. And essentially what this does is it makes it cheaper to borrow money, which they hope will encourage businesses to invest more, consumers to spend more, get things moving.
Like a sale on money.
Eh.
Everything must go.
Yeah.
Boost that economy. But tell me if I'm wrong here, but doesn't that also usually come with the risk of inflation?
That's always a concern when you start, playing with interest rates. It's a delicate balancing act.
Yeah.
And on top of that, they're also promising to support the stock market, which has been struggling, and hinting at a big fiscal package, which is essentially a fancy way of saying a potential influx of government spending to try and boost certain sectors.
Right. So a lot of balls in the air, it sounds like. But the question is, are these the right moves? Is there enough confidence that these efforts are actually going to work?
That's the billion-dollar question, isn't it?
Right.
Some analysts are skeptical, and they argue that China needs to address some of the underlying structural issues in its economy, rather than just relying on these kind of short-term fixes.
And this is where the elephant in the room, or should I say the dragon in the room,
Right.
comes in, right? We can't talk about China's economic woes without mentioning their property crisis.
Yeah.
The Wall Street Journal really dives into this, and it sounds messy.
It's a huge factor. China's property market is in a state of real turmoil right now, and it's a major drag on their overall economic growth. We're talking about a massive amount of debt, unfinished construction projects, a growing number of people defaulting on mortgages.
So it's not just a few empty apartments here and there. This is big.
This is massive. The journal even uses the term ghost town to describe some of these developments, entire neighborhoods of luxury apartments standing empty. It's a stark illustration of just how overbuilt some areas became during the boom years. They went all in on real estate as the engine for growth, and now that engine is sputtering.
Wow, ghost town. That sends chills down my spine. And what's China doing to try and like clean up this mess? The article mentions some efforts to support the real estate market, but it sounds like they're trying to put out a fire with, a garden hose.
Yeah, it's a complex situation. There are no easy solutions. They've taken some steps like trying to clear the backlog of unsold homes and encouraging banks to, offer more loans to developers, but it's like trying to patch up a sinking ship.
Right.
The scale of the problem is just so enormous that it's unclear whether these measures will be enough.
It sounds like a catch-22. They need to keep the real estate market like afloat to avoid a complete economic collapse, but continuing to prop it up just might create more problems down the road. It's a tough spot to be in.
So with all this in mind, what are economists saying needs to happen? Is there any consensus on how to get China back on track?
There's a lot of debate, but many economists argue that for these stimulus measures to truly work, China needs to make a fundamental shift. They need to move away from their traditional reliance on investment and manufacturing and start putting more money directly into the pockets of consumers.
So boost consumer spending and hope that jumpstarts the economy from the ground up. Sounds logical to me, but I'm guessing it's not that simple.
Yeah.
You're right, it's not. China's economic model has always been about government-led investment, big infrastructure projects, and an export-driven growth. Shifting to a more consumer-driven model would require a major overhaul of their entire system.
It's like trying to turn like a giant container ship. It
Yeah.
takes time, a lot of effort.
Exactly.
But why is that shift so important?
Well, think about it. For years, China's economic growth has been fueled by exports. They make things the world wants to buy.
Right.
But if the rest of the world, especially places like the US and Europe, are facing economic slowdowns of their own, demand for those goods might decrease. That's where consumer spending at home becomes crucial. If Chinese citizens aren't spending enough to pick up the slack, the whole system could falter.
So it's about diversifying their economy, not putting all their eggs in one basket.
Exactly.
Makes sense. But it also sounds like a long game. And in the meantime, we've got these short-term problems, like the slowing growth and the property crisis looming large.
Exactly. It's a balancing act between addressing the immediate concerns and making the necessary long-term changes to ensure sustainable growth.
It's a lot to unpack. But let's bring this back to our listeners. Because, while China's economic future is fascinating in its own right, what I think we really want to know is how this impacts us, right here, right now.
Absolutely. It's easy to feel disconnected from these global economic trends. But the reality is we're all living in an interconnected world. What happens in China doesn't stay in China.
Right. It's not just like numbers on a spreadsheet.
Yeah.
So break it down for us. What are some of the potential ripple effects we might see, here in our daily lives?
Well, one of the most direct impacts could be on prices.
Okay.
Remember that China is still a major manufacturing hub for a huge range of consumer goods. If their economy slows down, demand weakens, factories might cut back on production or even, shut down. That means fewer goods are being made, which can lead to higher prices on everything from, electronics to clothing.
So that new phone or laptop you've had your eye on, you might want to snag it sooner rather than later.
Right.
Okay, so prices could go up. Anything else we should be aware of?
It's not just about prices, though. Think about the companies that do a lot of business with China.
Yeah.
If Chinese consumers are tightening their belts, those companies could see their sales drop,
Makes sense.
which can impact their stock prices and potentially even lead to job losses here at home.
Yeah, it's like a chain reaction. One thing leads to another, and suddenly we're all feeling the effects. So what's the takeaway here? Is it time to panic? Should we be, digging a bunker in the backyard and stocking up on canned goods?
Panic is never the answer. But staying informed is crucial. Pay attention to how the situation unfolds and don't be afraid to ask questions. The more you understand about these global economic forces, the better equipped you'll be to navigate any potential bumps in the road.
Absolutely. Knowledge is power. Speaking of knowledge, we hope this deep dive has given you a better understanding of what's going on with China's economy and why it matters. It's a complex issue with no easy answers, but we'll definitely be keeping a close eye on it. Until next time, thanks for diving in with us.